One question, and I want your actual answer. Would you sell here? Most people say yes. And the reason is always the same. It's falling, it looks weak, it feels obvious. Selling something that's already going down feels like agreeing with the market. So here's what actually happened next. Price went up 40 pips against you for about 6 hours, long enough to take you out. And then it collapsed 50 pips straight through the low, without you. And if you said yes, here's the thing. You were right about direction. It did go lower. You were just wrong about price. At the end of this video, I'm going to ask you that exact question again. Same chart, same candle. You'll get it right, and it'll feel obvious. That's the part worth staying for. Here's the idea the whole lesson sits on. Expensive and cheap are not properties of price. Look at this number on its own. 10,420. Is that expensive? You can't answer. Nobody can. There's nothing to compare it to. Now watch what one measurement does. This is where the move started, and this is where it ended. High to low. That's the range. And the moment it exists, that number becomes answerable. Cut in half. 10,300. The exact middle of the move. That line has a name. Equilibrium. Fair value. The one price in this range where neither side is getting a deal. And it does something bigger than mark a level. It splits the chart into two different markets. Same instrument, same day, two completely different propositions. Everything above that line is expensive. Not expensive as an opinion. Expensive relative to the move that made it. That half has a name too. Premium. And the half underneath, it is discount. Now here's the part that flips the whole thing around. If you're buying, you want discount. Everybody knows that one. It's the version that gets taught. But if you're selling, you want premium. Because selling is buying upside down. You want to sell something for more than it's worth and buy it for less. That's it. That's the entire concept. So why does nobody do it? Because premium doesn't feel like premium while you're standing in it. It feels like strength. Price is rising. Every candle is green. The chat is loud. Selling into that feels like standing in front of a train. And buying a discount feels equally wrong for the mirror reason everything is red and falling. Your instinct isn't calibrated to value. It's calibrated to momentum. Which means it will reliably tell you to buy expensive and sell cheap. That's not a flaw you can train out of yourself by trying harder. It's why you draw the line. The line doesn't care how the candle feels. All right, same chart. Same candle I showed you at the start. Only now the range is on it. Would you sell here? %70 of the way up from the low. Deep in premium. Same candle, same information. It just stopped being a feeling and started being a measurement. And the trade writes itself. Sell at 10,420. Stop above the high the rally made at 10,490. 7 pips of risk. Target below the old low where the resting sell orders are. 49 pips. 7 to 1, and you chose none of it. The range did. 2 ways this breaks, and both are your fault, not the market's. 1. You measure the wrong leg. Pick a high and a low that didn't cause anything, and your equilibrium is a decoration. Measure the move that actually delivered price. 2. You use it as a signal. Premium is not a sell signal. It's a permission slip. It tells you where you're allowed to look for one. Nothing more. So the whole lesson in one line. Before you take any trade, ask which half you're in. Selling? You want to be up here. Buying? Down there. If you're on the wrong half, you don't have a bad setup. You have a good setup at a price that can't pay you. Go and do one thing this week. Take every trade you've lost this month, draw the range it happened in, and mark which half you were in. Then tell me the split in the comments. I bet most of them are on the wrong side, And I'd rather you found that out on a screenshot than on an account. Next time, what to do when price reaches your level and just keeps going. Draw one range. See you then.